Hello and welcome to This Week in Crypto, where we break down the most impactful developments from the crypto ecosystem over the past week. Here's what happened this week. Bitcoin's role in legal disputes is evolving as 2025 volatility spurs more private litigation. A Central Asian national currency-backed stablecoin KGST goes live on Binance. Industry voices debate whether quantum computing is a threat or an opportunity for crypto. Binance founder CZ weighs in publicly on address poisoning scams. Coinbase and Gemini were blocked in the Philippines amid a broader regulatory crackdown. Spain is enforcing MiCA and DAC8 in 2026, ending a long crypto regulatory gray area. Let's dive in. First, Bitcoin's 2025 volatility is now driving private litigation. A Reuters legal column this week outlined a major shift in how Bitcoin markets are shaping up, not just on price charts but in courtrooms. As Bitcoin soared above its prior records and then pulled back, the effect rippled into investor disputes and legal action. Here's what's happening. Bitcoin climbed to roughly 126,000 in October 2025, only to retreat towards the mid-80,000 range into early December. This kind of movement, roughly a 30% drawdown, has happened before in prior cycles in 2017 and 2021, but its legal impact is different this time. One structural factor that helped fuel the rally earlier in the year was spot Bitcoin ETF flows, which later became a headwind as sentiment shifted and outflows accelerated. Meanwhile, US regulators, particularly the SEC, was described as scaling back enforcement actions under the current administration, leading to private litigation becoming a primary accountability mechanism for market participants. The legal landscape shifting, so private class actions surged in prominence, partly because companies and token projects are now being pursued by investors over issues like misrepresenting and marketing claims that once might have been enforced first through regulatory actions. The report specifically cited litigation involving Unicoin, where investors alleged that rights certificates were misrepresented as asset-backed and SEC registered when they were not, a case still pending. Parallel litigation involving past products like Gemini Earn continues to shape expectations, often proceeding even as broader regulatory enforcement remains muted. Here's why this matters. This isn't just a price cycle story, it's about institutional risk and compliance culture. Volatility attracts disputes. When price moves fast, disagreements about risk disclosures and investor expectations become fertile ground for legal claims. Kyrgyzstan-backed stablecoin KGST goes live on Binance. In a development that touches on both sovereign currency use case and exchange adoption dynamics, a new stablecoin backed by the national currency of Kyrgyzstan has been listed on Binance. Here's what's happening. The Kyrgyzstan-backed stablecoin KGST has officially gone live on the Binance exchange. The listing was confirmed by President Sadir Japarov in a post on X. KGST is pegged 1-to-1 to the Kyrgyzstan, marking it as one of the first stablecoins backed directly by a non-major reserve currency on a major global exchange. The token was developed on BNB chain, a blockchain known for lower gas costs and high throughput, which can improve real-world payment usability. President Japarov's announcement framed KGST as a tool for cross-border payments and an initiative to deepen Kyrgyzstan's presence in the global crypto ecosystem. Binance CEO CZ responded by indicating that many more nation-backed stablecoins could follow, signaling a broader exchange strategy towards diverse fiat-linked digital assets. The announcement also mentioned other stablecoin initiatives, including a USD-pegged stablecoin backed by gold, USDKG, further diversifying the country's crypto projects. Here's why this matters. This is a rare example of national currency stablecoins getting global exchange access, which carries several possible implications. It expands the narrative of stablecoin beyond USD EuroPeg into emerging market currencies, which could improve remittance and FX corridors. The endorsement by a head of state and a major exchange lends it political and infrastructural weight, not typical for new tokens. This may presage further government-linked digital assets appearing on regulated platforms, especially if investors and trading volume materialize. Quantum computing meets cryptocurrency, threat or opportunity? This week also saw an in-depth discussion on how quantum computing intersects with cryptocurrency systems, an issue that oscillates between theoretical risk and potential technological advancement. Here's what's happening. The article frames quantum computing as a potential challenge to foundational cryptography used in systems like Bitcoin, which relies on hash functions that classical computers cannot efficiently break. At the same time, the piece highlighted a nuanced perspective that quantum computing could act as a catalyst for stronger security by motivating quantum-resistant cryptography and post-quantum signature schemes. For example, blockchain communities are exploring alternatives like Lamport signatures that could provide security resistance to quantum attacks. Rather than simply viewing quantum computers as a threat, some technologists see them as potential partners. They could accelerate certain computations, improve transaction validation mechanisms, or enable quantum random number generation for superior private key security. The article also mentions experimental blockchain systems that lean on quantum computing paradigms, though these remain largely theoretical at present. Here's why this matters. The quantum-crypto intersection is not just academic. Risk horizon clarity, most estimates put meaningful quantum threats to currently cryptographic standards many years out, 5 to 15 years, providing a runway for adaptation. Preparation accelerates innovation, so discussing quantum resistance today forces teams to think about post-quantum cryptography earlier, which could improve general network security even before quantum threats arrive. Ecosystem coordination. Addressing quantum threats will innovate developers, exchanges, wallet providers, and standard bodies, not just individual protocols. CZ weighs in on address poisoning scams. Scams continue to evolve, and this week the industry got a high-profile comment from Binance founder CZ on a specific exploit known as address poisoning. Here's what's happening. Address poisoning scams occur when malicious actors embed lookalike wallet addresses into a victim's recent transactions so that when the victim copies an address quickly, often without full verification, they mistakenly send funds to the attacker's address instead of the intended one. CZ responded publicly to a high-profile loss, saying such attacks can be eliminated if the industry collaboratively adopts real-time blacklist queries to flag poison addresses before transactions go through. He also noted that Binance already alerts users when suspicious patterns are detected, implying that exchange-level protections can help, but that a broader industry consensus would make defense more efficient. Here's why this matters. Address poisoning is different from protocol hacks. It exploits human UX and wallet interface limitations, not blockchain consensus faults. CZ's remarks reflect a shift in how industry leaders view security, not only guarding against external protocol flaws, but also mitigating human-targeted exploits with systematic protections. If exchanges and wallet providers adopt real-time blacklist checks or smarter address verification workflows, it could reduce high-value losses tied to simple copy-paste errors. Coinbase and Gemini blocked in the Philippines. Coinbase and Gemini blocked in the Philippines. In regulatory news that highlights how national authorities are tightening crypto oversight, Coinbase and Gemini were reportedly blocked across several Philippines ISPs this past week. Here's what's happening. The National Telecommunication Commissions of the Philippines directed internal service providers to block access to Coinbase and Gemini platforms as part of a wider enforcement push by the BSP against unlicensed crypto firms. Spain to enforce MiCA and DAC8 in 2026, closing crypto's regulatory gray area. This week also saw a clear timeline from a major European market, Spain, which is ending the regulatory gray area for crypto firms by enforcing both MiCA and DAC8 in 2026. Here's what's happening. Starting January 1st, 2026, Spain will enforce DAC8, requiring crypto firms to automatically report client balances and transactions for tax purposes, similar to rules applied for traditional financial institutions. Following that, MiCA licensing requirements will be enforced on July 1st, 2026, obliging platforms to meet government's capital and operational standards akin to regulated brokers. That was it for this week in crypto. I hope you guys enjoyed, and make sure to like, comment, and subscribe.